Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Friday, October the 10th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We have a couple of things that are going on as we take a look at the E-mini S&P. First of all, put support still down at 6,400. Call resistance still up at 6,800. Traders are definitely positioned for a retracement. Now, if they're on the back foot, this is going to expand and we are going to have another run savagely to the upside. The next gamma lines in play are 68.24 and 68.31. Now, what might cause that to happen? So October the 15th is the day that a lot of military becomes susceptible to the lack of pay in shutdown. And as we know, many people live paycheck to paycheck. This could be pretty troubling if they don't fix it. So I know that there are advances in the space working to get a deal done, particularly because our administration does not want to see the military suffer in this environment. So what have we got? Broad accumulation for the last, what is today? 10 days in the month of October. Big, broad accumulation. Now notice the size. It runs from 67.50, where the put wall is for the 0 DTEs, and 6,800. So that's 50 points. That tells us that we have a 50-point upshot. That's at this 68.50 to 68.60 area. That's where gamma level 6 is. Or 50 points to the downshot, which gives us 66.50, which sits at value area low. Currently, we're holding value area high, 68.65 or so. We are still making higher lows. My mind suspects that with these higher lows, dips are still buys. Now, what's been happening? We are still inside of this 4-hour candlestick that was made on October the 7th. So the high of the candlestick punches about, let's see, 20 points. Not quite. 15 points to the upside. We'll move that up here to 68.12 or so. What is that number? Yeah, 68.12. And so that region remains very much supply laden. Lots of traders trying to sell this pocket. Notice 1, 2, 3, 4, 5, 6 4-hour candlesticks. 24 hours of trading on the spikes of this zone downward. I suspect that it's going to stay there until we get resolution on the government shutdown. So, what do we look for today? Dips or buys? We are sitting in heavy congestion. So at this time, if you're thinking to yourself, hey, I want to trade a short, I would wait until the range expansion, particularly because we've got these higher lows. If we trade the short here, which looks like a pretty good scalp, remember from our session yesterday, scalps initiate at the wicks. The most wicks give us the quickest strike to the down space, but because we've got this undercurrent that's upside, don't be thinking you're gonna, buy the Ferrari with this trade. Not going to be so. All the candlesticks are retracing each other. We're sitting in a broad area of congestion. Yesterday, I said, listen, 67.60 makes for a pretty good buy zone. It was the anchored VWAP from the prior day. The anchored VWAP from today gives us 6,793. That allows us to potentially take a short here, but you better be quick or you're going to be dead. Watch that on a tight time frame. And if you see it pulling back and not able to break the support, buyers continually come in, get out. This is sideways structure. It is not trending structure. And it will become trending structure when we break out and pull back and hold another higher low. If you want to work in that trending structure, it means the pullbacks are buy zones. If 67.60 does not hold, 67.50 will be the next area of frontline support with an anchored VWAP wick at around this 67.40 zone. That's what I would be staring down. Pretty wide formations. Today is a Friday. Fridays do tend to have bullish consequence, but we just have to see, okay? It is a definitely wait and see. Try the dips for buying. That looks like the most advantageous. Let's take a look at the NQ. Please remember also to collapse into your 30-minute chart and look for the volume candlesticks high-low at the highest volume of the prior day, as well as the opening range. So as we take a look at the NQ, we can see the same sort of thing. Put wall, sit still for the big one at 27,600. Call wall close at 25,400. The next gamma line on the expansion is 25,500. And then 25,750. Now, what are we doing here? Yes, accumulation, but I suspect we've had an accumulation break. So I am going to remove this fib sequence and build another based on the gamma lines for gamma level 5 and gamma level 9. Why? It's closest to the range, right? And so this is the range expansion. This is a 50% move out of this range. So it's holding the 50%. Remember, if we're looking at like 5-minute charts, that 50% range becomes really important. And notice what it did. It hit the 50% range, came back, tested the breakout, and is now moving to the north again. This looks pretty bullish in my mind, right? Tech still running the show. We're seeing a little bit of tech rotation, but this is what we're staring down. Right, so we've got two trend lines sitting around here. Base of support holding in the pre-market at 25,250. Still looks like a pretty good buy zone. 25,350, top of the range. So that is a place to take profit if you're trading with trend. Now, let's say you want to see a breakout. What's it going to do? Well, this call wall's got a lot of supply sitting here. Remember, supply forces price down, demand forces price up. And the market, all it cares about is facilitating trade. And so here we are in this new breakout zone. Easily, we could see the move to 25,460. Next gamma line, 25,500. What's the best bet? Dips or buy zones, right? Let's see who's chit-chatting today. Austin Goolsby, consumer sentiment. Alberto Masalam. I don't know who that is. I guess he's another Fed speaker. All right. So let's take a look. Dips or buys. If you're thinking to yourself, all right, what if this is range bound? It becomes a really nice buy around 25,150. Look at how much of a spread is sitting there. That's a lot to come into a deeper support. This 4-hour candlestick that is currently binding the E-mini S&P has broken out in the NQ. So the NQ is performing much more, much stronger. I was trying to find an adverb there. Couldn't find one. All right. Put support, as I mentioned, 25,000. for the 0 DTEs, much lower, 24,700 for the weekly, but this call wall is the same for the 0 DTEs and the resistance zones for the regular call resistance that looks at the monthly and weekly options versus the daily options. And so this tells me that they are not really keen on shifting this call wall yet. Once it breaks out, they will be keen on shifting it, simply because they'll be in big trouble. All right, so there we have it. We've got the higher levels, got the lower levels, dips or pullbacks. Price action looks pretty solid to the upside, but these candlesticks are retracing each other. So don't diddle in the middle, my friends. Just don't do it. Not a good idea. Let's take a look at Bitcoin. Inside the call wall, inside the put wall. They want to keep it inside of here. Are we holding 120,000? Yeah, we are. The gamma line of interest is about, what is that number? 120,000, right? That's the gamma line where most of the traders, besides being at the call wall, are sitting. So what is this call wall? 124,000. What is this chart doing? Looks like mean reversion, right? Looks like a flag pattern. We have high, low, lower high, higher low, lower high, lower low. And so the wicks are very important here. Could this be an accumulation space between the put wall and the call wall? Why, yes, it could, right? Dips, going to be buy zones, but take a look at this very interesting patch. We have both buying pressure and selling pressure. Now, the buying pressure is weak right here, but it's visible. Notice how different the price action looks comparatively to the last areas of selling. Notice down here, this multi-length oscillator is doing something very strange. It is showing buyers and sellers, sellers being stronger because the color is brighter. So what does that tell us? Dips or buys into resistance, which should give us another dip. All right, but they are trying to hold here in between the put wall and the call wall. You want to try and do this? Look for the break. Ooh, this one's tough. Look for the break above 122,000 to see if they can get up above 123,000. That might be a pretty good scalp long. Or just wait for the dip and then pick it up again, right? Look at how far away we are from value area. And let's draw a new Fibonacci, right? If we draw a Fibonacci from the high lows of this motion, let's see what we get. Interesting. All right, let's try to draw one on the value area high versus the value area low. About the same. Let's choose a value area high event to value area low for this one, right? Looks about the same. Tried to get up to the 100% retracement. It could not. So the goal is, can it capture this 50% zone and move to the north? I suspect that is the line in the sand currently. If we bounce up into 123,600 and we cannot hold it, we will break the put support zone, right? Notice yesterday how the put support and the call support were challenging each other, so there would only be one winner. Turned out the winner was the call wall being forced down, and so they have adapted, pushing the put wall further to the south. Let's go to gold. Man, it'd be nice if I did one day where I didn't sound like, a 75-year-old lady who was smoking 10 packs of cigarettes a day. All right, here we go. let's take a look at gold. What's happening? Well, this was a risk-off move. Why? Peace deal going. My suspicion is that gold is sussing out. You know, I used to think that that was like a term that we just came up with. I watched a video from the 60s and somebody said suss out. I just think that's very interesting. But, so what we want to do is let these guys work out what's going on. Here's the fade. This is the risk off event of war. But, as I mentioned, a lot of us gray hairs, we know that peace deals in the Middle East are extremely fragile, and a lot of gold traders are seeing that exact same thing. This is what I suspect, anyway. So, what are we staring down? Let's get rid of this Fibonacci. All right, now, here is our accumulation zone. It's very cleanly defined, which is another reason trading the metals have become so much more interesting to me. Hat tip to you, Beth Ellenberg. Really, if you hadn't just said, hey, take a look at this, I really would not be looking at it. So just really enjoying your insight there. Okay, that being said, what are we doing? We are above the monthly call wall, weekly call wall. We are below the 0 DTE call wall. That number is 4,025, where the big call resistance line is 4,000. Remember, we went back in the chart to 3,000 to see what they did, and we noticed about 150 points, really, of noise as they resolve around this price action. We could have another risk-off event if, you know, the government remembers that they work for us. That would be super nice. And they do what needs to be done together. They find a way and get to the center of the aisle. Okay, that being said, this isn't a cross current. Notice what they've done, right? Old support, new resistance. That number is very close to the call wall of 4,025. What are the traders trying to do? Again, here we have, now this is much more common in gold than in other spaces because we have bullish pressure and bearish pressure together, with the bearish pressure being more prevalent under bullish trend. What does that mean? They're buyers below. They're buyers below, but they're also sellers above. And so this 4-hour candlestick from yesterday that gave us the massive fade, let's see where the wicks are sitting. Let's try that wick. It's a little higher than where price action gave us the high, 4,046 and some change. This one's 4,047. Let's anticipate that that is the wick, and they're just inching each other out. Remember how gold likes to do its traders. Not very kind. They're kind of mean to them. So they break out, make it look like a bullish run, and then collapse into the space. These traders really like to test the boundary before moving in trend. Be careful about that. Here's the base. Support ledge still looks like the anchored VWAP from October the 6th. That's holding the floor, and that is 3,967. Put wall, 3,950 for the 0 DTEs. It is 3,800 here on the put support event. You know, I am not, they are being very protective, expecting that fades could happen. But at the end of the day, savage fades are going to get bought. The trend is up. Momentum is very high. Dip action is very shallow. Bullish runs. But we also could be in mean reversion. Value area high, 3,930. And then we fall into the relative congestion zone where everybody accumulated earlier. So what's the trade? Old support, new resistance. Let it break out and fail before you take the trade if you're looking for something that trends in that general direction. Okay? So, dips or buys, spikes or sells. Let's take a look at SPY. Oh no. Let's go to silver. So silver's recovering a fair bit better than gold. Silver's industrial. Silver is also really important in moving price action associated with industrial strength. Call wall still up at 50. Put wall still at $46.50. That is a savage range. Look at the wick hitting the call wall yesterday. What an incredible short. I missed this one because I did not have it on my chart, and so that is a little sucky. But we are still building inventory, and if we have ourselves another cycle of risk down, there could be a really sweet buy zone sitting right around this call wall. Again, you got to let it get up there and resolve, or get down here and resolve, because if you simply buy the dip at this wall, you're going to get in trouble, right? You got to let it come in there and then break through something that it likes to hold. And so I'm going to move this up to $46.83. Why? That's the anchored VWAP. That's the anchored VWAP from October the 2nd, right? We have higher highs and lower lows in this structure. So cross current, but a lot of selling. Buying has just come back. If they test this call wall again, I think they fade it. That's another magnificent short waiting. All right, finally, let's take a look at SPY. 4-hour formations show us very range bound. Right, let's draw the box. So here's the accumulation space. From the breakout of the last area of accumulation, that's right here, to value area high that punches out a little further and then pulls back. Could we be in mean reversion? Yes, we could chop around for several days doing this. Absolutely we could. Are we making higher highs? Yes, we are. Are we making higher lows? Yes, we are. Is momentum doing the same thing in the last set of highs than this set of highs? Essentially, yes, but it is slowing down. What do I expect? If this ranges into the call wall at 675, if it blows out into a higher gamma line, which I do not see at 677, it should fade. My suspicion is that the gamma line at 674 is holding price action in check. The move to 675 should bring sellers into the mix, but buyers are clearly sitting at the 0 DTE put wall at $670. Sideways action dips into 670, buy zones, spikes into 674, sell zones under a bullish formation, telling us that dips are buys. Could consumer sentiment give us a dip that we need? Potentially, yes. I would expect that number to be a little negative because of the media around, the shutdown, but I don't know when that data is collected. All right. That being said, that's it. Be careful. Remember, 1 to 3 trades max. That's going to keep you in the sweet spot. You're going to bring your focal point in and go, this is what gives, right? That's what's going to give us the things that we look for. So draw a line in the sand beforehand, watch that ledge, and then if it's come into a wick and you can handle the risk, have at it. Good luck today, everybody. I'll see you on the streams.